Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 21st of September. Markets have been largely treading water over the last week in the absence of any new positive catalysts. In the US, there was some disappointment around the Federal Reserve's announcement that it would not be making any further stimulus at this point. Of course, based against 30 million people claiming unemployment benefits in the US and an uneven recovery, something is possibly required, and hopes again are turning towards some sort of fiscal stimulus from the government. In the UK, of course, the MPC, Monetary Policy Committee, mentioned that whilst it was also standing still just for the moment, it did stand ready also for what could be a difficult few months. Obviously, we're coming to the end of the furlough scheme. UK-EU negotiations are proving pretty testy at the moment, and there's also likely to be another spike in unemployment. All that being said, markets largely unchanged from where we were this time last week. In the year to date, the Dow Jones is down 2.2%, the S&P 500 up 3.9%, Nasdaq up 21.5%, and the FTSE 100 is still down 20%. So turning to next week, there's more news from central banks as the European Central Bank gives us its latest update. Fairly light on the company reporting calendar, but probably two to keep an eye out for. The first one is Kingfisher. This is the owner of B&Q and Screwfix, and as we've seen from today's retail sales figures, it could be a beneficiary of the fact that there's been rather more retail sales going on online, but particularly with regard to home improvements and DIY during the enforced lockdown. Indeed, Kingfisher has pretty much bucked the trend. It's up 28% in the year to date, and it was actually marked down with the rest of the market in March, and it's up around 124% since then, all of which has of course resulted in its being promoted to the FTSE 100 in June. So half year numbers from Kingfisher next week. Also, the industrial conglomerate Smiths Group has got full year numbers next week. This does anything from detection to aerospace to medical to oil and gas. It's got a £70 million per annum cost saving target by 2022, so we'll be looking for updates there. But it is fairly well regarded as a tech-led, asset-light business with a lot of aftermarket revenue, so one to keep an eye out for as well. Thank you for watching. Have a great week.